how policy can influence in businesses, because I think it's really trendy right now to hear policy. I think it reminds me of compliance 20 years ago, right? So it's like policy all over, especially within digital asset space. And we want to discuss a bit on the reason behind of that. And so we're gonna find out some regulatory shifts and how policy can help and influence in all this. So to start, maybe if you wanna, like, any of you guys want to say any words about what you think is the policy role in developing all this and unlocking innovation. Does anyone want to start first? Ben? Should I just direct? Yeah.
I'm really impressed that you said policy is trendy, so this is probably a world first. But no, I think maybe just to kick things off, I think often we can think of policy in sort of a quite a siloed and sort of static way. It's like, well, these things are happening and we're reporting on them, but I actually think the policy function has like a much more important role in thinking like much more longer term about where the opportunities are for the business, both in terms of new markets, in terms of supporting sales, but also in terms of thinking about, well, what are the new products that we could build that will take advantage of some of the developments that we're seeing. And I think sometimes stepping a little bit out of the weeds of like, stepping a bit away from the kind of compliance side of like, oh, this rule's coming and I need to meet this obligation. It's like, well, where's the opportunity here as well? And I actually think there's a huge amount of opportunity that comes with the regulation. And we kind of need to start perhaps thinking about that more as a policy function than we kind of traditionally do.
Totally. I love that, thinking about policy as a product, right? As a business per se, and not only supporting business, but also supporting business to see ahead. Not only what's in force, but what's coming and what the business guys, like CEOs and people that interact with business all over, can leverage from this knowledge in events. So, Maurício, you are influencer, podcaster, a product maker in blockchain. Oh, that, yeah, it's a huge deal. And Maurício, tell me if you agree with this view that policy is being something important for us. I have to turn on.
Hello? Yeah. As the proper DGen in the room, in a policy panel, that's kind of, not exactly my cup of tea. But I'll tell you that as also a former person working in financial services, yes, there is a big convergence. And I like that we're being forced to rethink the role of policy, as Caroline was saying, in light of digital assets, because it's not just the technology, right? This is borderless, 24/7, natively digital, permissionless and decentralized paradigm. It is a lot to take in. I keep telling my friends, I'm happy I'm not a regulator, because it's damn hard work to understand what these things are and how they have any implications on all sectors. It's the internet. It's not just financial services or the socials and whatever. It's actual technology that will underpin the internet of ownership. So I'm happy that this conversation is happening, but at the same time,
well, I'm happy it's happening with music too.
You didn't expect that at this panel, right? So I think that's an important conversation. But I think the most important thing as policy becomes center stage in digital assets in general is the stance of policymakers, regulators, and lawmakers. Understanding what the paradigm is about will enable not more regulation, not less regulation, but proper regulation. And that's where I think the sweet spot is. As a builder myself, I see as part of my job is to educate these areas of the world, because we're not building against it. We're building something that is paradigmatically different. I have a recurring joke on the podcast that is, right now regulators are 3D beings trying to move 4D objects. So the dimensionality is different. So the change in stance, not only to understand, but also to enable, is also different. And to a certain extent, if you're a regulator in the space and you're not on chain, you will have a very hard time understanding what's coming for you.
I totally agree. And I think, well, I prepared some questions, but I don't intend to follow. So I apologize. But taking this point that you mentioned a very good point, is how regulators can follow up and monitor and proper supervise the industry, with trying to this now became famous responsible innovation, right? Right, to balance investor protection with innovation. So you or anyone who wants to chime in on that, how do you guys think regulators will handle that?
I mean, because
Tell about the on-time supervision.
I just said I don't want to be a regulator right now. And that's because the challenge is massive.
But I actually think part of the obligation of the industry is helping regulators
Absolutely.
meet that challenge.
Yep.
Because if we don't, you're not going to get the implementation that you actually want. You're not going to get the outcomes, and your business is going to be stunted.
100%. And I think there are bodies in the industry that are doing the outreach for educating regulators. I know that are universities that are bringing in specifically courses for regulators to understand more broadly, not just the technology, what the implications are. And I'm hoping that because blockchain, which is the underpinning technology around all of this, is a network and it's community-based, that the regulators will take that as a cue to actually become increasingly more community-based. I know that there's a lot of collaboration across different jurisdictions. And I also know that this is a competition, because if you're a regulator and you really nail this space first, the attraction of capital, builders, innovation,
Jobs,
taxes, will be massive. So I really look forward to the ethos of the blockchain kind of permeating the ethos of the regulator, so they can fall in line or enable this to properly happen.
I think it goes a bit beyond education, like also building the tech, right, that they need to actually be able to meet the obligation of and do effective supervision. Because otherwise the ultimate place we're going to get to is like, this is still, we can talk a bit more about this, still a relatively small market. I mean, market conditions mean that every market is now a lot smaller than it was a few days ago. But it's a relatively small market in the scheme of things. And so if you're a supervisor, and the work that I've done with supervisors is really about, well, like, why am I investing time, money, resources on this relatively small market where I've also have to supervise this much bigger market?
Yeah, resources they not often have to spare, right?
Exactly. So building the products or making the reporting such that is much more digestible, so that you ultimately as a business get a much better outcome and much more certainty, which is, really what people are looking for at the end of the day.
Yeah, I think what both of you are saying is like kind of understanding the language of the regulator. And so like when you approach them, you have to kind of understand, have their perspective, right? Are they thinking about consumer protection? They have to balance that with innovation, right? And so when you approach them with the tech or the education, I think it's hard to not be like over ecstatic and excited to kind of share this message, but to be able to kind of craft it in a way that they understand and like why it's relevant or why this tech is important for what they do. And so you're not just kind of regulating for the sake of regulation and just kind of like fitting new things into old boxes.
So you're telling crypto people to get rid of jargon. That's harder than building a blockchain, I'll tell you that.
Alex, maybe you just continue and tell us a little bit about both your challenges in Stellar, building the policy, kind of trying to merge this with your goals in financial inclusion and making a robust infrastructure for financial products. And also please tell us about the US, which is like both on the good side for crypto and unfortunately now very bad for all of us. But tell us.
Yeah, I'll just talk about the crypto stuff. So
okay.
So we're seeing a sea change. I'm sure you all see it. And I think a lot of it is just kind of catching up. The U.S. is kind of playing catch up for what they think they should have done in the past few years, right? And so I'll name a couple of notable, I guess, changes that we've been seeing. The first is through the SEC, right? That's the U.S. security regulator. We know that, wherever your stance may be on them, at the minimum, they've been a bit punitive to the industry. And so they've kind of taken back a lot of lawsuits against like Ripple and Coinbase and Uniswap. And they've also started like a crypto task force, right? And so they're actually actively inviting industry and folks to come in and participate and speak to them. And, we know their goal really is to kind of build stronger taxonomy and like subsequently kind of build a little bit more regulatory clarity kind of around what securities are. And this is kind of a more maybe unique problem to the US, but of course this has, like global market consequences, right? And so, and the second thing I'll mention is out of the OCC, which is one of the US's banking regulators, they've recently put out a letter that is rescinding a previous letter that mentions that banks or national banks are prohibited from engaging in crypto custody and stablecoin activity. And so they've kind of rescinded this letter. Yes. And so this is kind of another domino that kind of needs to fall for banks or traditional financial institutions to really get that green light to engage in tokenization or kind of blockchain-based activities, which is really what they're interested in. And the last thing I'll quickly mention is stablecoin legislation. This is, a long time coming. Most of the stablecoins in circulation are dollar denominated, so there will be global repercussions. The White House wants to see this passed by August, and it's pretty likely that will actually happen. And still a couple of things to figure out, of course. But these are kind of the two things that really will think that will have kind of effect in different jurisdictions of, if we see kind of global markets or activity and liquidity kind of shift into the US is kind of unique because I know in the EU, the requirements for FMIs and centralized depositories are a little bit more strict in kind of how that plays out. In the US, working with DTCC and things like that are a little bit looser. They're kind of really best practices. And we've already seen kind of private placement, like debt already issued on private blockchains, but that has kind of totally circumvented the use of centralized depositories. So, it'll be a kind of a sea change to see where different jurisdictions kind of follow the US. So a lot of to be discussed.
Yeah, no, and I think we all think that will cascade very strongly to the rest of the world and moving to the rest of the world. So Safello, that you are CEO, is leading crypto exchange in the Sweden and the Nordic countries, right? So thinking about how MiCA that it's kicking right now, and we spoke about harmonization of regulations and how that can empower business. There are, crypto exchanges are borderless by nature. So how are you envisioning this new regs coming into and helping or not helping your business though?
Well, I'm not only envisioning it, I'm like living it right now because we had our MiCA application last week, and I think it was, in the end, like 1,500 pages or something. So it's like basically turning it into like a little small bank. And when you're a smaller team, it's like a lot of work, which is good. The industry have been demanding to be taken seriously by the rest of the world and the TradFi economy. And okay, here you go, adapts in a way. But what I think is interesting with your question is because, yes, the technology enables global interaction, and especially like stable coins, you can send a transaction from anywhere in the world to somewhere else in minutes. But even though, so for instance, now in Europe, we get a harmonized regulation for the first time. And I think it's that the US is looking a lot at Europe and how this implementation is going right now, and they will pick like the best parts of it and take those parts. But even though we have a harmonized regulation in Europe, it's really up to each regulator, like how do we help the companies applying in each member state. So unfortunately, where I'm operating, the regulator is very hostile towards crypto and has always been. And that has impacted the banks. So for a fact, like even though we have maybe 4 local competitors, Safello is the only one that has a Swedish bank account. Like no one else has a Swedish bank account. So like they're trying to smoke out the industry, but I mean, if you can make it there, you can make it anywhere. quote Sinatra. But so it's really, when we talked to the Swedish regulator, they said, like, we won't do anything. We won't even translate the forms. We won't answer any questions. Talk to ESMA, all right. But then if you go to Malta or even France or the Netherlands, they're like, hi, yeah, welcome. Here's a law firm, here's a bank, and of course, as like a business leader, I want the tax revenues to go to somewhere where I'm like celebrated and not tolerated as a company. And so I think, and I also want to, I mean, we will always have a Nordic legacy and we will still be in the Nordics, but it's tempting to be where you are really appreciated and where the regulator can see that you actually bring something to the table. And to add to that, like, Safello has won a public procurement process. We have onboarded like the Economic Crime Authority, the Swedish Police Authority, and the Border and Customs Office as clients to our platform. So we really work close to law enforcement agencies, the regulator, the banks, and that is something that's like you can't just do once. It's like something you have to do over the course of over a decade to like earn some kind of credibility. But it doesn't pay your, it doesn't give you revenue either. So it's a balance on how much you should invest into that. But yeah, so when it comes to the implementation, I think it's, even though we have a harmonized regulation, it's really different across the member states. And I think in the end, being like, having an open-minded regulator that wants to understand, that wants to get into the details of how the technology works, for instance, I think they will benefit massively from that.
Very interesting. But Emelie, do you feel like with MiCA now and the passporting, that you guys will be able to do business easier in other EU countries? Do you feel like this will empower your business to be, doing work business in a country that the regulator is more appreciative or?
Yeah, absolutely. We're filing in Sweden, but we will probably file in another member state as well. But I think yes and no. It will be easier to establish a subsidiary in another country, and you can just offer your services to let's say Spain or whatever, without getting a local license. So yes, you have some kind of benefits, advantage from that internally. But still, what people don't talk about is that, like, okay, then you have to report like suspicious transactions to the Spanish police in their way. Like, so a lot of the things that you have to do to still be compliant is very local, and it's both on transaction reporting. So we built like a tool, AI tool, to bulk report all the suspicious transactions. But the Swedish police accepts that, but will the Spanish police? I don't know. So
then technology comes into place, this all monitoring tools and reg tools that gonna help you guys. But hopefully, with all this work you're doing together with the regulators and with MiCA coming in, they will like you guys better at some point.
They like us, but they just don't like our product.
So I know. And now, Dea, tell us a little bit. You've been all over Europe, APAC, MENA, Middle East, everything. So I'm sure you have a lot of war stories to share. What you've been talking with these regulators around the globe.
To Nikki's point, all my plans have died since I joined Fireblocks, and I've been traveling around. One thing that strikes me is how the narrative has changed a year from last time in Paris Blockchain Week, right? So last year, the US American companies were looking to Europe, taking experiences from here, taking it back home and saying, what would the EU do, right? Be like them. And obviously now two things changed since then. Obviously the elections in the US, but also MiCA went into the implementation phase. And one thing that we're discovering through the implementation, and the Safello story is definitely not unique in your observations about regulatory friction. One thing we're discovering is that the growth story for crypto was successfully bought and sold to the European Commission, but it was not successfully sort of sold to member states. And this is a little bit on us, right? So the European Commission, when they started drafting MiCA, and I think if they're here, they could say this too, when they started drafting MiCA, they had a very simple option. Just extend MiFID, basically. Make them all securities companies, extend MiFID. They used the moment in time to say, well, let's not do that, because MiFID has some problems. We've learned from the market that it does, but let's not extend the full gamut of rules onto this nascent industry. Let's do better by them, right? And this was very much the drafting intention of MiCA. Some of this got diluted in the negotiation process, and I was in Brussels for it. And a lot of it is getting diluted in the implementation process. And the reason why it's being diluted is because, as all of you have been saying, the tax bureaus that are underlined, or the jobs that are being underlined, are no one's priority. And that's what we have to fix, right? This has to be a conversation about economic growth. It has to be a conversation about jobs. It has to be conversations about tax. And in this era of trade wars, it has to be a conversations about how you make your market more competitive than somebody else's market, particularly for Europe, right? And this is to your point, your question, Nikki, about observations around the world. This is the main difference. This is what's not happening in Europe. And it is happening a lot more, obviously, in other parts of the world. I must say, I started the year with the hypothesis that a lot of markets would be looking to the US and kind of taking a cue from what's happening under the new administration. I did not appreciate how true that sentence is. So from Hong Kong, Japan, Australia, there's been good conferences and events and meetings with regulators in all of these markets. I did not appreciate to what extent the permissiveness towards stablecoins in Japan, the permissiveness towards stablecoins in Hong Kong, the openness of the Australian market, which, until now was very conservative, is taking a cue from the US. And my hope is that trade tensions don't erode that dialogue. So we're kind of living in this kind of two-phase world where trade relationships are very tough, and government-to-government relationships are very tough. Like notoriously, the commissioner hasn't been to DC, if nobody has noticed. But the working level, the kind of the bureaucrat policymaker dialogue can still take place, because for example, the stablecoin proposals in the US are not that different from the stablecoin proposals in MiCA. Like the intermediary legislation around the world is not that different. So are we going to see equivalence? No, because equivalence is a political signal. And in an era of trade tensions, you don't make political signals like that. But can we effectively work towards equivalent rule books at a sort of bureaucrat level? I think that's very possible. And it might actually be the most plausible cross-border dialogue in these like trade tensions at the moment.
Very interesting, Dea. And I think it goes a lot to your point about like the difficulties in practice of achieving harmonization or goal. So Emelie, in terms of how you guys deal with that, do you plan to like how are you going to be structured for face this challenges going forward in terms of compliance with these new rights? Do you feel like confident? How are you guys feel about it?
Yeah, of course. Like we feel confident. We've invested a lot of time, money, and resources into this from day one. Safello is like short for your safe fellow into crypto, and that's what's like kind of branded the whole company. And that's how we've been around for more than a decade, 12, soon 13 years. So to really always like put compliance first. But as you all know, there's always a conflict of interest when you're running a financial type of business, because the more scrutiny you do, like the less revenue you might do. So, but of course, I think it's super important, and I think now with MiCA coming, you have to. There's no place for non-compliance really, and I think what will be interesting is the coming 18 months period to see how the landscape, especially in Europe, how it changes and who will still be around, who will get the license. And because there's a lot of small players that have, it's nearly impossible to implement this.
Saying that?
I would say that, yeah. You can try, but it's a lot of things. It's like not only like on like, okay, corporate governance, then you have like the capital requirements and
cybersecurity.
Yeah, exactly. Yeah.
So you are foreseeing consolidation or
Yeah, and it's already happening, and we have a lot of companies reaching out, and then it's like, okay, why do you reach out now before you get your MiCA license? And they're like, yeah, no, we just feel like it's good timing in the market, and of course, like everyone knows that they will have a hard time to pass MiCA, and so yeah, I think there will be a lot of consolidation going forward.
that's an interesting view for us to be ahead. So I think I will explore a little bit of your background and expertise, Maurício, in terms of changing a bit of leaving MiCA aside for a bit. I know you're very involved with zero knowledge proof and giving back the data ownership to the users, and that's, I think, very central discussion to everyone that is in the room, because I see the future as digital identity. We're not there yet, but we are getting there. And I would love to hear your views on that, and how, again, coming back to the supervision and regulatory sides, how that will impact in the landscape for you.
Yeah, I think we can all agree that if you're thinking about traditional businesses and traditional government, public blockchains are at times too public. So the view that we carry on with Midnight is that everyone is entitled to their privacy, right? Privacy is a human right in the digital era. So the ability to selectively disclose what people need to see in particular situation is important. Even though we claim back ownership with NFTs, if someone can use your PFP, do you really own it, right? So I think that the vision that we're progressing is blockchains could potentially comply to the privacy laws like GDPR or LGBT in Brazil. So that's the premise of what we're building. But also to the point where we can, in a particular jurisdiction, build towards that jurisdiction's own set of rules, which you can't necessarily do in any chain. So the privacy angle is important to that end. When it comes to regulators leveraging the infrastructure to their own benefit, like Caroline, you were talking about, I think the view, and that might not be shared by everyone at Midnight, but definitely is something I give a lot of thought about, is how they can actually use the blockchain. Can they establish like standards for people to operate on? Can they establish on-chain oversight? And can they establish that in a way that doesn't impose that people will have to dump all their data on an immutable shared public database, right? So I think that's where I think privacy comes on. And there are many use cases in terms of maintaining privacy in ways that enable businesses. Because if you're in trade marketing, for instance, you don't want your prices and your volumes on the blockchain because that's strategic, right? That's confidential. So you can't use a blockchain for that, a public chain. Usually businesses will resort to private permission chains and whatnot, which are not at all private, because if you're on the network, you can see the data. So there are degrees of privacy that you can establish there for using public blockchains to benefit from all the efficiencies, but also maintain sovereignty over your own data. So that's kind of the vision. And when it comes to disclosures, which is one of the aspects that regulators will care about, when to disclose and what to disclose is a guidance by the regulator or a requirement by the regulator, but ultimately is a decision from the individual or the business. Whether you want to comply or not, it's not to be just established by the regulator, but you might have a difference, or you might be on a hostile jurisdiction where you do want to protect data from your business and your client. So that prerogative has to sit with the individual or the business. So whether that is a risk or not, this is for the business to judge, but the ability to preserve that is important. And in general, blockchains, public chains won't allow that. So Midnight is actually aiming for that. You mentioned something about identity, and we've seen the AI phenomenon in the last 2 years. And this is, I'm going to toss it up to you.
Yeah, I'd limit because I was I thought it was
and
interesting.
I've been repeating this. Is probably why I'm being shadow banned at LinkedIn. Is that AI needs blockchain? Like, great. Okay, I'm sorry for that. AI needs blockchain because in a world where nothing is intellectual property, why would I create anything new? So I think there is an underlying discussion we may not be having at length, which is how do we secure data in a world where it's become commonplace to just give away your data in exchange for very shady free services.
Right. Yeah. No, totally. And I think that puts us in a very good position. Caroline, you've been studying a lot on AI, and tell us how you see that coming. Well, if there is one thing that people are hearing more than policies, AI, that's for sure. How these two things come across and how AI will be used for digital assets landscape.
So, yeah, good question. Maybe just before I get that, I want to just pick up something that both Dea and Maurício said, which is, this idea both on one hand, sort of using the technology by regulators, and also coming to this idea, and Dea sort of touched on it, which is around, the current sort of trade wars and what does international cooperation look like in that environment. It's more administrative and bureaucratic than perhaps political. And I think there's certainly people in this room who are very well versed in what international cooperation, particularly on the tax front, looks like in a very practical sense. And I would fully support that thesis. But I think something we're perhaps not even talking about enough is, just this enormous shift in the sort of economic environment and the geopolitics and the implications that will then have. So I think, again, it's very easy to think, this piece of regulation, that piece of regulation, but actually like the much more important story I was thinking about as I thought about this panel and preparing for it was, like all these regulation developments, all the stuff you've mentioned, Alex, in terms of the US and things going on in EU and Japan and Australia. But like, if I was thinking, like, what is the one biggest story or one biggest development that will affect the crypto industry going forward, it has to be what is going on in terms of the changing geopolitical environment, which is taking place right now. And like, if we think about that very practically, like, what does that mean? I'm talking about things like, what does it mean to have economies wanting to move away from a focus on the US dollar, for example? What does that mean for US dollar-backed stablecoins? What does that mean when you're having more trade taking place with local currencies, and now is crypto, whether it be a stable coin or some other form of coin, actually being used as the bridge between those local trades? So I actually think there is a lot of things going on. So if we think like beyond 1 year, 2 year, like I think we should be, and as policy people, like really starting to be like, this is where we're going to need to be in 5 years' time, because this is the kind of direction of travel. Because I think what's becoming increasingly clear is that no matter how current events kind of pan out, and whether that takes, 3 weeks, 3 days, or, kind of 18 months, 2 years for this to sort of settle back into a new normal, what is part of that new normal is a very different view of international relationships on the economic side. And countries, it's been shot down, but the BRICS have repeatedly said, Europe has repeatedly said, if you look at what's happened with the sanctions on Iran, like we want to be able to have options outside of a US-focused financial system. And I think that's like probably for me, like the most important development going on for this industry rather than the specifics of MiCA and so forth.
And I know you need to go back to the AI question, but I want to make one more point. There is a narrative that I would have hopefully forgotten, but it's coming back on the surface, which is, where's your data? Is it in my country? Right? And we as an industry say, wrong question, right? Where are the keys? Wrong question. There shouldn't be only one key, right? The key should never be the same. It's like the mantra of Fireblocks. Should never be sitting united. But we're facing lots of questions about that, right? So like this era of economic distrust is resurfacing conversations about data localization that we would have hoped and we've forgotten. And this is not going to end. And so I do think that there is probably a campaign that we as an industry can consider, because we all have our own regulatory relationships and our client relationships, to continue reiterating that, right? Like from an engineering perspective, we know decentralizing your data is safer than centralizing your data. Splitting your keys is safer than having it in one place. From a policy perspective, trusting servers that are not in your territory seems not very safe right now, right? And that is our fight to fight, right? We like the engineering argument has to win over here, and it just has to become again a narrative for ours and more broadly speaking the digital industry, because otherwise no permissionless ledgers, no decentralized infrastructure. Like, I don't mean to be like doomsday, but like our industry is built on the logic of cross-border openness, right? And that is a thread which I don't know if it's fundamental yet or will materialize, but it's definitely a narrative we need to nip in the bud, and it does require a mind shift or maybe even an objective shift when we speak to regulators, right? Because if your objective is sovereignty and your objective is safety, at some point these two objectives become opposite to each other. Data safety, I mean.
I guess the best technologies need to win, right? There's no...
Yeah, I would also argue that the progression of zero-knowledge proofs and the separation between what a proof is and what the underlying data is will probably help in that debate. Because if you can't contextualize cryptographically what the zero-knowledge proof is about, it doesn't matter who owns it. So and no one can actually see because it's just a yes or no answer. So I think there is a middle ground there where you might want to have physical sovereignty over the hardware in the systems that are running as a nation, but you would accept that proofs from your citizens can be anywhere in the world because there's no use for them without context. So there might be, and I like that you said the engineering discussion has to win this because there are solutions for very well-defined problems.
I just wanted to add on from the U.S. perspective for what folks have been talking about from like the geopolitical angle is that like U.S. stablecoin issuers are massive buyers of U.S. debt, right? And the U.S. kind of has a debt problem, right? And so there is a narrative or like a particular angle to kind of focus on where how strong will the U.S. kind of squash or kind of force competition such that like foreign issuers can still participate in the debt markets, right? And like this is what they're kind of struggling with Tether right now, right? Like Tether is a foreign issuer that is issuing U.S. dollars, and they are you can't really geofence Tether, right? You can kind of like all these stablecoin legislations focus on primary issuance, right? But in the secondary market, you can kind of get Tether or any stablecoin through kind of peer-to-peer or decentralized means. And so really you're kind of only fencing it off at the exchange level, right? And so, but then kind of on this other side of the coin is that the U.S. does want folks like Tether to continue buying U.S. debt, right? And then we have to remember that like U.S. debt is very liquid, right? Like stablecoins are private institutions at the end of the day, and they are subject to corporate bankruptcy. And so like when if something happens, God forbid, right? Like there is no safety net for individuals from any kind of like banking or cash-like perspective. So like the need to acquire U.S. debt will never kind of go away. And this is kind of the impetus for a lot of the CBDC work initially, right? With like the China's like I forgot like bridge and I forgot what the system is called. Yeah, but a lot of foreign jurisdictions, they still trade bilaterally with the U.S. dollar, even though the U.S. is not involved, right? And so there is an angle that they want.
So seeing that change, right? I mean, the UAE and India have signed a deal to do trade in rupees and dirham. Like these things, this is what I mean. I'm not as convinced that these are givens if we start looking 5-10 years out. And that might sound really far away, but I don't think it's far away if you're trying to plan a business and work out where to invest.
And there is in macroeconomics such a thing as endless supply. If endless supply of U.S. debt is a thing, do we want to have that? Does the U.S. want to have that? What does it look like if you have endless supply of any asset?
But to Caroline's point, I think before and to you, Alex, still like the U.S. wants Tether to buy the debt, and because they want the U.S. to be the currency of the world. And if you look at BRICS, for instance,
either that or China.
Yeah, but like BRICS represents, what is it? 40% of the population of the world. They control like 30% of the GDP and control 20% of the global gold reserves. And they are
they've said that they will issue a gold-backed stablecoin, and that they are actively working for a de-dollarization. So of course, like in my mind, a lot of what's happening in the US right now is a total defense towards that. When it comes to the stablecoin regulation, when it comes to appointing an AI and crypto czar and taking these questions really seriously, creating policy that is transparent, not to shut it down.
Guys, we could go on and on here. Do you want to just finalize the Emelie or any?
No, look, I guess perhaps what we're seeing is very similar in the crypto space, and the use of AI is very similar to what we're seeing in traditional financial markets. And Ezra and EBA have brought out some surveys they've done of the traditional financial space. And, I guess predominantly, what we've seen so far is you've got some of the chatbots, you've certainly got these sort of algorithmic trading and so forth. I think that, and one of perhaps the thing that we've got some of, I guess, the sort of token-enabled LLMs, for example. But I think probably the step change, which we're going to see in traditional finance as well, is sort of around this agentic AI space, which, like recent developments on sort of model context protocol has helped helping make that process of knitting together different systems using AI so that they can actually talk to the LLM together is starting to happen, but it is perhaps a little further away. But I mean, from a regulatory perspective, it's interesting because you have something like almost 80% of banks already using AI and very in some form, right? Very similar in the crypto space. But then you have the sort of EU AI Act, for example, coming over like as an overlay after the fact when the industry's already kind of well entrenched the technology. And I think of it as a little bit like DORA in the sense of, so now we have to go back and rethink all these things we've been doing and rethink about kind of whether we're compliant and how we actually need to comply in a similar way that I think businesses are having to do on DORA.
At least like come back and review and repack it and maybe put it the same thing in another way.
Yeah.
But more written with process and everything. Guys, such a brilliant conversation. Thank you so much. Any final words that you want to just scream out before we finish?
No, thanks for having me, and appreciate being the DGen on a policy panel. Appreciate it.